What's going on, guys? This is Chandler Smith, and today I'm going to show you how I ran the numbers on this duplex, how I went through the whole process and decided to buy it to where I was getting a 15% cash-on-cash return. I'm also going to show you a very costly mistake that I was forced into, and I'm going to do all of this on my brand new app that you can download on iOS and Android as of this week so that you can run all of the numbers quickly and efficiently. So with all of that being said, let's jump into it. All right, guys, for those of you that don't know me, my name's Chandler Smith, and I've been investing in real estate for the last 6+ years. I currently own 99 units of rental real estate, and I did a series of every investment property that I've purchased throughout that entire process. And so this duplex that we're gonna talk about today is the next deal in that series. And on this duplex, I was able to get a 15% cash-on-cash return. And on top of that, if you love this video and seeing how I ran the numbers and decided to purchase this property, you can click this link to go to the playlist that shares with you this kind of information on all of the deals that I've done throughout my investing career. Now, just so you know how I found the deal, it was a deal that was actually on the MLS at kind of a funky time. And here was the situation. I have a group of buddies that we all invest together. We share deals, and so we're a little bit competitive when it comes to finding deals, but we're also here to help each other and to learn from each other. And I would say I'm a little bit the ringleader of this crew because a lot of these guys are guys that have worked for me in door-to-door sales, made great money doing that, and then needed a place to invest. And I was the first one that invested in my area, in my age group. And all of these buddies have become really good friends, and now we all kind of invest together. So we'll bounce ideas, we'll share deals with each other, and there's one investor in particular that is an absolute stud. His name's Garrett Myers, and he's actually worked for me for the last 6 years now, and he also has his realtor's license. So he goes out, sells a ton of pest control in the summer, and then in the off season he goes and he'll sell and buy a lot of real estate. So what he did is he was on the MLS and he found this duplex. So he put in a super lowball offer on this property, and surprisingly, he got his offer accepted. Here was the situation. He was at a place where he had just got a couple other properties under contract, and he decided he didn't want to go through with this deal, even though he knew it was a great deal and it was under contract. So he called me up and he said, Chandler, here's the deal. It was on the MLS, but they accepted a great offer. I think the numbers are awesome. Do you want to come look at it and see if maybe I could just turn the contract over to you? So I went in, looked at the property. Immediately I saw there was opportunity to raise rents. It was a very clean unit. It was in an area that I had rented before, and I was stoked. I definitely saw the potential for it to be a great hookup. So I said, yeah, let's do it. We were able to transfer the agreement over into my name, and that's one of the reasons you want to make sure when you get a property under contract that you make it transferable, so that if you decide you don't want to go through with the deal, you can flip it to one of your friends.
Not transferable.
So him as a realtor, he had it under contract. He was able to flip it over to me so that now I have this duplex under contract at awesome numbers. Now, hearing this, I know there are a lot of you saying, well, Chandler, what is a good deal? How do you know what a good deal is? And what I would tell you is that is the most important question you need to be asking. And in order for you to figure this out, you need to go onto the App Store, whether you're iOS or Android, and download Cbs Rental Calculator. This is a rental calculator that I paid for and developed to be the ultimate calculator for helping real estate investors decide whether deals are good or bad. And I've looked at dozens of different investment calculators and apps out there, and all of them want your private information. They want you to do all of this other garbage that you don't need. This is an app that if you know what you're doing, you can plug in numbers in literally 60 seconds and see what your return's going to be. And so I'm going to use that app to show you how I ran the numbers on this particular property to know that it was going to be a good property. And if you want to follow along, again, you can go download this rental calculator completely free. I'm not trying to sell a course. I'm not trying to make money. I just created it because I believe that it will help you. The only thing that I ask you to do if you download it is make sure you leave a good review on the App Store and that you smash that like button, subscribe to the channel, and hit the bell button so that you can catch my other videos that are going to help you become a better real estate investor and create a huge passive income. Let's jump into this property. So with this property, I was able to get it under contract for $140,000 with me covering only 1% of the closing costs. So right away, you're gonna plug in $140,000. You're gonna plug in 1% closing costs, and I was able to do this with just 25% down. So the next one, it's on a 30-year loan, and I got a 4.2% interest rate. Now, I know I said I was gonna tell you about the big mistake I made at the end of the video. Here's the reality. This is the big mistake that I made. 4.2% interest rate is kind of crappy. The reason the terms are bad is because I needed to get a commercial business loan on this property. What that means is, first of all, you have a higher interest rate, but on top of that, on my down payment, usually you need to put more down. Now with my bank, I was able to negotiate to only get 25% down. However, my rate changes every 5 years, and I have a balloon payment at 15. So this absolutely sucks. I hate loans like this, and they're the kind of loans you need to get once you've used all your personal loans. Now, since then, I've been able to get my wife in a situation where she now has loans available, and so if we run into other deals like this, we're gonna use her loans. However, this loan blows chunks, and that's the one thing about this deal I'm disappointed in and a mistake that I made, but at the time, I didn't really have an option, and even on a commercial loan, the numbers still make a ton of sense. So again, 30 years, that's not a true 30 years because my rate's going to change in 5. However, that's how it's set up for the loan. So that's my situation. That is what my interest rate is at. And I know I'm disappointed about it, but life happens and it's still a good deal. The next thing is the rents. Now, when I purchased this property, the previous tenant had rents at $650 in the basement and the upstairs was at $750. Now, a lot of you are running the numbers saying that's $1,350. Well, I knew I could get them up to $1,450. I was positive the upstairs tenant, I could be charging $850 per month. And I also knew that that tenant was about to leave. Their contract was about up and they weren't staying there month to month. They were vacating the premises. And so for me, I was pumped. Now, a lot of people might be nervous looking at a property saying, oh, they're gonna have vacancy. Not me, because I knew exactly what I could rent it for. And I knew that top unit I was gonna get at $850. So when running my numbers, I plugged in $1,450, which it did end up being once I got my upstairs tenant in. So we're gonna plug in $1,450 on the rents. When it comes to utilities, I'm not collecting any other fees or utilities from the tenants, so we're gonna leave that blank. And then my vacancy in this area is at a clean 6%, and that's a worst case scenario. I'm hoping to come in a lot better than that. Now, when you jump down to maintenance, I run my maintenance at 12%, my management at 7%. I'm not paying any utilities. I don't have any additional expenses. My insurance is $240 on this property, and my taxes are $1,500 on this property. Now, I've got all of these boxes filled in. That is all you've got to plug in. Now, we could dive into the maintenance side of things. The reality is you just have to know how expensive your properties are going to be. From having to fix roofs, change water heaters, deal with pipe issues, deal with whatever kind of issues you're planning on in this kind of a neighborhood. I put all of those expenses in my maintenance, and that always hovers right around the 12% range. And that's on the worst case scenario end of things. And so that's where I run my numbers. You need to make sure you understand your market to run yours, but this is where the numbers came back at. So you're gonna click run numbers, and you can see it plugs in your purchase price, your total capital required, and down here, you're able to see that my cash on cash return is 14.83%. So right around 15%. Now, if I get a property at a 15% cash on cash return, I am all in, ready to rock and roll. And if you don't know what these terms mean, essentially what a cash on cash return is it takes your initial investment and then it takes your return, which is whatever rent's coming in minus expenses and mortgage going out, whatever's left over, which is your cash flow, and it figures out what percentage your cash flow is of the total capital that you put into the property. So you can see this property is in a cash flow of $5,346 every single year. On top of that, that makes my cash on cash return just shy of 15%. My principal pay down at $1,785 every single year, and that's putting me around a 20% return before taking into consideration your tax benefits or your appreciation. So looking at this, my cash on cash return is where I need it to be. And so I said, hey, this is a great deal. Let's do it. So I purchased the property, everything went flawless. We were able to get a new tenant in there right where I expected we were gonna be able to get rents. And ever since I purchased this property, it has just been a cash cow. Now on this app, I'll hit on just a couple things I didn't mention because for me, they aren't as important because I'm focused on my cash on cash return, but you're able to see your debt service. So this is what's gonna go out every single year in your mortgage payments. You're able to see your principal pay down, your cash flow, your cap rate. Essentially what your cap rate is it shows you the return on your investment if you had purchased the property in cash. So your rents are coming in, your expenses are going out, you don't have a mortgage. This would be your return based on the purchase price rather than the actual money you had in to the property. If you paid cash for the whole property, then it would be the return on the money that you had in the property. So that's why you have your cap rate. The reason I don't like looking at the cap rate is all of my properties I'm purchasing with a loan. So I want to see what my cash on cash return is because that's my real return on my money. The real reason I included the principal pay down here is that is money that's going into your property. That really is a return. Now, a lot of you are saying, well, Chandler, that's locked up in your property. Yeah, it is, but you can free that up when you sell your property or when you refinance. The reason I didn't include appreciation is that's never really your money until you sell or refinance or do something to get access of that money. The other return that I didn't include in here is all the tax benefits, because if you're doing things right, you're not going to get taxed on this cash flow or on this principal pay down. Now, I'll talk about that in other videos because the tax benefits and the appreciation are a huge upside. However, to be able to get your cash flow at a 15% return on the money you have in it, in my mind, there is not a better investment in the world, because even if you don't get appreciation, even if you didn't have principal pay down, even if you didn't have tax benefits, which you're gonna have all of those, that would still be an incredible return. Now, I know a lot of people are saying, well, Chandler, what is your standard? What do you need to be above to buy? And I'll be honest with you, it's varied. When I started investing, it was 20%. At one point a couple years ago, I said, you know what, if I find anything above a 10%, I'll buy it. Right now in this current environment, I won't buy anything below a 15% cash on cash return. And honestly, I would say even hold to a 20, especially if you're a new investor, because the market is kind of crazy right now. And you want to make sure that you're buying something that will continue to rent. And even if you have to lower rents or take a hit, you're still going to be able to cash flow. That's my goal, is in the worst of worst case scenarios, I want to always be able to cash flow. Now, I hope this video was super helpful for you to see how I found the deal, how I was able to run the numbers on the deal, and how this new app works. So again, if you enjoyed the video, please make sure you push the like button and subscribe to the channel and hit the bell notification so that you can know about all of my future videos. And again, if you want to go see the rest of this series where I break down all of the other properties I've purchased, I'll make sure the link is down in the description so you can go and check out all of those other deals and kind of see how I've gone through the entire process of each deal that I've purchased. Because the reality is, I'm not perfect. I've made mistakes along the way. I wish I could have found better financing for this deal. However, the numbers worked, and so in my mind, it was totally worth jumping in with both feet and making it happen on this deal. And make sure you go download that new app, because I put a ton of time and money into it, and I'm confident it's gonna help to make you a better, more efficient investor. And I really did create it just for you so that your investing experience could be better. So again, that's the Cbs Rental Calculator, and then go and use it. I love nothing more than for you guys to go absolutely kill it because you use this app. And if you get to the point where you're like, you know what, Chandler, I wanna get to that next level. However, I've watched a ton of your videos. What can I do to get even more information? You could hop onto my website at chandlerdavidsmith.com and sign up for a one-on-one call where I'd love nothing more than to help you work through a deal or answer any other questions that you might have. We will look forward to seeing you in the future videos where my goal is to help you to create a huge passive income. Thanks so much, guys. Have a great day.